In our lives, all things and events have their own story, deep nature and purpose. We carefully observe things and events, trying to understand and explain their essence. We invite you to participate with us in each of our stories. We appreciate your time. Subscribe to our channel and find out about our next stories. Today we will talk about the risks of a repeat of the global financial crisis by the end of 2025, comparable in scale to the crisis of 2008. The bankruptcy of the American investment bank Lehman Brothers 16 years ago in September 2008 was the largest in history. It provoked panic in all world financial markets and became the catalyst for the so-called Great Recession of 2008-2009. There is an opinion that the world economy has not recovered from the consequences of that economic crisis until now. Moreover, 16 years is a long time for the financial system, and the world economy, analysts admit, is already close to new shocks. Lehman Brothers left behind $613 billion in debt, not taking into account $155 billion in bond debt. This largest bankruptcy in the US left the Great Depression of the 1930s far behind. After the bankruptcy of the investment bank, the crisis, due to the global nature of the world financial market, spilled over to the rest of the world. The 2008 crisis had several key causes. First, real estate prices in the US rose sharply, and this created a large number of undersecured mortgages. Second, complex financial products became widespread, and this made it difficult to assess risk and caused instability in the market. Also, the availability of loans with no down payment and with grace periods increased, which stimulated long-term consumption. As a result, credit bubbles were formed in the market. Finally, the world's leading rating agencies inadequately assessed the default risks of market participants. In turn, the Chinese financial market experienced new shocks in 2015-2016. In 2018, another slowdown in international trade and production began due to the start of a large-scale trade conflict between the US and China. In 2020, the global economy experienced the devastating effects of a pandemic, and military conflicts in Eastern Europe and the Middle East occur from 2022. In fact, there was almost no year between 2010 and 2024 when the world economy did not experience acute shocks. In the past 3 years, about 80% of all existing dollars in the world have been printed. This has fueled inflation in almost every country in the world. Global financial markets also continue to experience turbulence, with developing country financial systems in particular facing stress as high interest rates and inflation slow global investment, threaten corporate defaults, and ultimately increase the risks of a debt crisis. According to some analysts, in 2025, a repeat of the 2008 crisis is possible, but its scale and nature will depend on new risk factors. Regulators and market participants have drawn conclusions from the 2008 experience to minimize possible potential risks, but there are also new ones. For example, for 2020-2024, about 80% of the entire existing dollar mass was printed, which caused inflation in almost all countries, since the dollar is the reserve currency and all global prices are pegged to the dollar. In addition, the development of crypto assets is also an additional risk factor, as it increases inflationary pressure on fiat currencies and allows the withdrawal of real capital abroad, which complicates the process of regulating local markets. Tectonic shifts are taking place in the US dollar-based global financial system. More and more countries are creating their reserves in alternative currencies and gold. And unused dollars are actually increasing already galloping inflation. Plus, the Fed funds rate is now at 20-year highs. This greatly slows down the economy and increases the risks of default of the corporate and public sector of the US economy. Geopolitical events, trade disputes and changes in global trade that could affect economic stability can also be considered risks. Military conflicts in Eastern Europe and the Middle East, the ongoing trade war with China have also increased global crisis risks. If China fails to reorient its production from the US to Asian countries and Europe fails to find cheap energy sources for its production, it is almost guaranteed to lead to a structural crisis in the world economy. According to forecasts, by the middle of 2025, a new global financial crisis comparable in scale to 2008 may break out. It is provoked by the fastest ever jump in key interest rates in developed countries over the last 3 years after 16 years of almost zero values. How is the situation similar to 2008? The global financial crisis scenario is still likely to materialize, and its peak could come in the middle of the next 2025. The probability of a global crisis is now higher than ever and is about 16–20%. The trigger of structural problems could touch the unhealed financial wounds of the past, leading to a global storm. The main problem is that this crisis has a unique nature and it is very difficult to predict its consequences, but one thing is clear: it could plunge the world into a new decade-long depression. We will try to understand the current situation and compare it with the situation in 2006–2007, which preceded the onset of the crisis in 2008. The global crisis predicted in 2025 will still have a completely different nature from the 2008 crisis. Comparability with the 2008 crisis is mostly about scale, not nature. The next global crisis will be structural financial. On the one hand, the world is accumulating a large number of structural problems, ranging from shifting technological patterns, growing sustainability risks, geopolitical risks and rising inequality. On the other hand, high interest rates, protectionism, and geopolitics impede the free flow of capital to address these structural problems. Third, a host of problems since the 2008 crisis remain unresolved. These include the build-up of bad assets, attempts to hide them through securitization, the excessive proliferation of derivatives, and the transformation of financial markets into casinos, as asset prices do not always correspond to the real financial position of businesses. There is a different view that in fact the 2008 crisis is still ongoing. In a general framework, the ongoing process and its stages can be described as follows. There is a 100-year crisis of the Great Cycle, where 2007 and 2008 can be considered as a prelude to the crisis. Such a fundamental crisis has never happened before in the history of mankind. This cycle started to peak at the end of 2019, and by the end of 2025 it will come to its full completion and will further decline. The probability of a crisis in the middle of 2025 is quite high. Existing imbalances in financial markets, high levels of debt and high interest rates create conditions for a possible crisis. In addition, geopolitical risks and uncertainty in the global economy may aggravate the situation. Although we should not forget that all these processes are dynamic and can change in real time. If we compare the situation and crisis preconditions of 2008 and now, we can notice both differences and some similarities. The situation in the US labor market this year and the Fed's monetary policy in the last 2 years are similar to the situation in the crisis year 2008. But, the main difference is that in 2008, the crisis spiral began to spiral because of the severe drop in home sales in the US housing market. The global economic crisis of 2008 began amidst a slump in US home sales starting in 2006 as lending rates rose sharply. It then turned into a crisis of high-risk mortgage loans, which caused major US banks to start failing. This resulted in stock market sell-offs and an outflow of investment capital. There is no sharp drop in sales in the US right now. However, there are signs of a high probability of a so-called hard landing of the US economy or recession. The number of newly created jobs in October 2024 was significantly below the forecast. The labor force participation rate fell to 62.6%, and the US unemployment rate for October 2024 is at 4.1% and has reached its highest level since November 2021. In 2008, the US also had serious problems in the labor market and unemployment then reached its highest levels in past 16 years, due to which business activity also declined. The situation with the key rate is also similar. In 2006-2007 in the US sharply increased the key rate, which led to a decline in real estate sales, and in 2008 began to sharply reduce it to eliminate the effects of the crisis. Now the US is at the beginning of a rate cut cycle. For more than a year, the Fed funds rate has been at its highest level in more than 20 years. The regulator has not changed the rate since the summer of 2023, and began cutting the discount rate in September 2024 to 5.0% and in November to 4.75%. Everyone is in intense anticipation of the Fed's decision on the outlook for further rate cuts at the next meeting on December 19, 2024. We did not want to bore our viewer with some boring statistical data of the current year, but we believe that it is necessary to confirm or deny with arguments the forecasts about the impending financial crisis in 2025. If the crisis erupts in mid-2025, the consequences could be catastrophic for the global economy. We can expect a reduction in trade volumes, falling commodity prices and worsening business conditions. For ordinary citizens, nothing good is expected. There will be a significant increase in unemployment, lower incomes and higher prices for goods and services, hyperinflation and progressive price increases. We are not sounding the alarm, we are not trying to sow panic. But we should all understand what is happening and what to expect, be prepared for the most negative consequences of the current events. The crisis of 2008 was a warning to everyone. The crisis of 2025 could be a new chapter that will turn our perceptions of the financial world upside down. But you can prepare yourself, improve your financial literacy, study the economy, follow the trends in the markets, invest your income wisely and stay abreast of current events. We remind you not to miss more informative and entertaining videos on topical issues. Don't forget to subscribe to our channel.